This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:32 p.m. Eastern Standard Time, an absolutely gorgeous summer evening here on the East Coast, on the Jersey City waterfront overlooking New York City. I'm sure you're all having a good time, and that's why probably no one has showed up yet. Whichever the case, the purpose of these webinars is to educate, to inform, to forecast, and to prepare all our members and traders to profit from these extremely volatile markets and in general, both markets and stocks, period. Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Clueless Trading YouTube channel, which is accessible to all members. They can view at their own convenient time, and most importantly, accessible to anybody out there with the internet connection. The only request that I have that please pass the word around so that people can listen to these extremely powerful and precision webinars, videocasts as we like to call them, and profit from the U.S. financial markets. It's really as simple as that. On a secondary note, we have a terrific Instagram channel, which is primarily for promotional purposes, promotional and marketing purposes, and highlights of certain options trades are put there at the end of each day in the evening, and you guys can certainly browse it, and extremely helpful, both for members and for people out there who have no idea what Clueless Trading is all about. On that note, we shall begin. We have my good friend Mike H here, very loyal member, very smart individual. Say that with all due respect. Mike, are you connected? Mike, can you hear me? All right, I'm sure Mike.
Yes, I can, but I'm occupied up here in Green Bay.
Not a problem, sir. I'll keep this short and sweet, straight to the point. It's going to be a quick update on our previous webinar, which forecasted everything, almost, I'm proud to say, every single thing that happened in the market over the past 5 days or less, 4 days. Fifth day is obviously trading day wise is Friday, and we're just going to update that. So thank you for attending, Mike. All right, so let's start off with the bigger picture. Before I go into that, I'm going to keep it, like I always do, the couple of broader points. We know exactly what's going on. We have a Mexican standoff where the Trump administration, rightfully so in my opinion, is pressuring the Mexican government to clamp down hard on the southern border, so it's not an open freeway for thousands of migrants to walk through. And again, I don't blame the people walking through. They're looking for a better life. We all understand that. We all look for a better life. We're all about migration, even within the United States, right? We don't want to pay higher taxes. We move down to Florida. So, that's just the way it goes. Or we go to Wisconsin, beautiful state. Or we go to Texas, where it's very tax friendly. So when international migration happens, we do not blame the people who are doing it. We blame the governments who are not stopping it. So that's exactly what they're trying to do. Now, the process they're doing it with the Mexican tariffs, I disagree with. I believe that there are better ways to do that, but I'm sure it's a high-level game theory poker game. So I'll leave it at that. And like I said on the Sunday webinar, I believe that the Mexican standoff with the tariffs going into effect on Monday, the 5% tariff, they might not. Looks like the market has already taken that in stride, that we might get a 5% tariff on Monday, and then they're going to renegotiate and eliminate that, and it's not going to be 5% every month, as a good old Donald, my New York buddy, has mentioned. Okay, so to make a long story short, without getting into the political dimensions of that, this is a hardcore measure to wake up the Mexican government, who's actually quite friendly. The new government, the prime minister, president, by the way, goes by AMLO, Labrador, I believe is his last name, is extremely respectful to the U.S. administration, and that's a very good thing, and understands that picking a trade fight with the United States of America is going to be extremely hurtful to the Mexican economy, which also would be hurtful to the U.S. economy, given that almost 60% of hardcore goods are traded between us and Mexico, especially in the automobile side, farming side, and on the energy side. So saying all that, I believe there's going to be a favorable resolution in the coming days. We know the China situation going on that is prolonging, but there has not been any escalation of hostilities on the trade front in the form of comments either from President Trump or from Prime Minister or from President Xi in China. In fact, they both have been a little bit conciliatory towards each other, and I believe that it's not going to be easy, but that they are going to meet somewhere in the middle. There's going to be some sort of, mediation, which will help the markets and U.S. corporations find their footing. Aside from that, the Brexit situation is continuing. President Trump had a very warm reception in England. I visited London many, many times since I was a child, and I'll tell you that despite some protests and all that stuff, he had a pretty good time there. So that's good. All right. So the Brexit situation is continuing, and the fact, and this is something I do want to mention to all my members, because you don't hear that from the media, you won't hear that from other trading services. Here is really what happened, and this is the reason why the markets rallied over the past couple of days. Okay, President Trump openly said that even if there's a hard Brexit, which he obviously favors, I don't necessarily favor that, but hey, just the way it goes. The U.S. and the UK, the United Kingdom, the bilateral trade agreements are going to be upheld, which means that financial institutions which are based in London, the city of London, as they call it, is a financial juggernaut next to New York. That is the most important financial center of our current economic, modern world. And some of you didn't realize that Hong Kong's the third one. There's Dubai. Believe it or not, Beijing's not one of them. And Frankfurt is another one of them. And he said that basically we will go ahead and maintain and enhance our bilateral trade agreements and all of the banking agreements and everything that go with that. And that was a big relief for the market. That's the reason why banks rallied. That's the reason why you had Bank of America lottos go up frigging 230 or 300%, which I alerted to all of you people. And I'm still alerting to you to buy the BAC June 14, can buy the June 21st, 28 calls. All right. So that was one of the things that happened. The media is probably not savvy enough. I'll say that directly. I'm not being Machiavellian. I'm just saying it the way it is. They don't seem to realize that that comment that President Trump made at a press conference in London, all right, I think he made that, maybe he's in Ireland right now, meeting the Irish Prime Minister, is extremely important and extremely positive for the markets. It's a sigh of relief. Because if you have a hard Brexit and you completely have to renegotiate all the trade agreements with the United Kingdom, it is not fun. You're going to lose a lot of money. You don't know what to do. It didn't happen. So thank President Trump for that one. All right. So there you go. All right. Now you know. On the other side, let's get back into the technicals. Anybody who has not reviewed the Sunday webinar, which was, and the one prior to that on Thursday evening, is being, and I'll be straight out, we say that in New York, is being a complete idiot. Forget about listening to my squeaky voice, but everything that was explained on that webinar, every technical, whether it's a Stowe crossover, whether it's a falling wedge breakout, all that stuff, which means money in your pocket. You're doing yourself a disservice by not listening to it. If you're not willing to learn, you're willing to lose. It's just the way it goes in this business and in life. So, saying all that, let's take a look at one of the most important charts from a swing trading perspective. In other words, you're not watching every 15-minute movement candle, every hourly candle. You're looking at the daily and saying, should I stay in this trade or should I not stay in this trade? So looking specifically at the overall market, staying in the SPY trade has been a huge winning trade. I was looking for another word to replace that. Okay? Because everything that I talked about, and again, I'm not the type of person, I think most of you already know by now, to like pat myself on the back and say, oh, I know it all. I don't know it all. What I do know is how to read the frigging markets. I do. I know how to read the frigging markets because I've been doing it for a long time. I know how to read my charts. I know how to construct them. I know how to read the candles. And I'm constantly learning, by the way, how to improve my game, my skills. And I know how to read people, and I know how to read life. Well, learning every day. If you know how to read people, and if you know how to react to situations that are adverse situations in your life, and you stay calm and you move on and hit back and fix it to whatever degree it needs to be fixed, then you are going to be an amazing trader over time. If you freak out every time you get a parking ticket, and you freak out because a thunderstorm hit and took out your TV, your digital box or whatever the case may be, or your dog got the flea, and we have 3 of them, and you think they're dying, well, you're not going to make a trader. Traders need to be calm, collected. They need to have opinions. They need to take risk, and they need to act. So if it's the same theory in life, pretty much. Is it easy? Yeah, it's easy when you take all those variables and apply them in your own mental framework. And it's extremely difficult when you're a monkey in a hot tin roof and every one of these candles makes you jump around like a crack addict. Okay? So what do? You fall off the roof, never make any money. So this entire move that's happened, that I said was going to happen and hit this level, which it did. This is precision forecasting at its best. Introduced me to other services who basically said we were going to hit the 50, Fibonacci 50% retracement level on the ES1 out on the S&P or the E-mini charts, while we were down here just a couple of days ago on Monday. Introduce me to the services because I'd love to collaborate with them. Love to have them come and talk to us here and explain how it's done. I don't know it all, but I know enough to help you all make a better living. On that note, let's start. So we have the daily. What do we have here? There's your daily. Here was the falling wedge explained in excruciating detail on the Sunday webinar, and I believe on the Thursday one too. And what was 531? 531 was Friday. So this was explained actually on the Sunday webinar. And this is exactly what happens. Want to get into it too again? Please review that. Too many dogmatic shorts, started to short the market down at these levels, and then bang. Okay, so that is now reaching overbought conditions, and that overbought condition are very close. Anywhere over 82, 83, when we look at the numbers on 90, at this level, at this zone, the markets take a pause. So where's the pause level? The pause level, in my opinion, given an optimistic scenario, now that we have crossed over this line here, which I explained again, very much in detail, was the 34-day moving average. This is where we are. Futures are up about half a point. You can see that. Forget about numbers. Just look at the visual picture. Look at the size of these candles. I said it before, and I'll say it again. You see a bullish engulfing candle. That was the 500 point type of rally that we got just 2 days ago, right? This was where we got in, based on this hammer reversal on the 8th of March. Right there. This is not a coloring book. This is real life. This is how I pay my bills. All right. So I take this very seriously. Some of you might take it as a joke or not. I don't think so. But if you guys, I know some of you are just sitting around like, oh my God, I missed it again. But I can't help you with that. Okay. A $300 account could be $2,000 right now. Facts. Based on every single trade that I put out there, even if you took a few of them. Even if you just took the SPY trades, your account would be up about 300 to 400% right now. Just if you just took the SPY trades, the 40 cents, 50 cents, 70 cents dollar calls on the SPY. Forget about individual stocks. Think about that for a minute. So this is your 34-day moving average on this investing.com platform. At this point, the magnet is the 50-day moving average at 28.74. That's roughly 30 points from here. Change the color of this. Bear with me. 30 points for 30 handles on the S&P from where we are right now as we speak to where the 50-day moving average is, where I said the market always acts as a magnet to retest the 50, 34, and the 50-day moving averages. Why? Don't ask me that stuff. That's just what the market does. Because you fall off the highway, you want to go back on the highways. The highways are the 34 and the 50-day moving average based on the type methodology that I use. End of story. And why am I so convinced about it? Not just the charts, because I've seen it happen over and over and over again. Now, along the way, there's a lot of volatility, which you can't see on these daily charts because of these candles, which masks the 15-minute, the 1-hour volatility. It's either green or red, right? There's a lot of movement in between that, a lot of movement in between these candles, intraday. That's why I say, manage your trades looking at the short-term 15 minutes, 1-hour charts, and hold your trades based on the daily and the weekly. That's why I say you got a gap open, 15, 20 handles on the S&P 500, sell at the open. What more to ask? God just gave you a free lottery ticket. Take it. Then regroup back, re-enter as needed. Because there is no guarantee that each of these candles will be so lovely, fat, green, bullish, engulfing at the end of the day. It takes time to develop. There are quick pullbacks during the day. There are sudden news bombs that hit the market, like the Mexicans just walked out. All that stuff. The garbage rumor that a lot of the media spreads. Like sources said this happened. Markets pull back 60, 70 points. Don't freak out. But if you're up a lot, always take some decent profits off the table. If you have a small account, it doesn't matter. Get out. If you have a big account, you have a lot. Bigger account meaning a day trading type of account above the threshold, day trading threshold, you can move in between and trade stocks with your buying power. You can trade individual options, move in and out at free will. If you don't know how to do it, sign up for the advanced coaching sessions. I'm always helping people, always working with them, showing them what I've learned over the years. Am I right all the time? No. Am I very wrong on certain directional bets? No. Am I wrong on a 15-minute thing that there might be a flash crash? Yeah, because nobody can quantify a flash crash. But I know what the levels the market can fall to or not, and where they can rise to. So at this point, this is the magnet. Getting straight to it. I want to keep this within 45 minutes or so. This session, 28.75, 30 points from where we are. that translates into roughly 200 points more on the Dow. Can we get 200 points more on the Dow on any inclination that the Mexican trade team has satisfied some of the demands, or at least convinced the Trump administration that they are doing what they need to do to stop the massive inflow of illegal immigrants from the southern border and walking across Mexico? Yeah, it can happen. And I believe it will happen. You get 200 points in literally half an hour. Boom, you're done. Just the way it happened today. So that's it. Nothing, nothing to see here. Now, is it going to be easy? No. Is it possible we have a sudden pullback because there's major disagreement between the Mexican trade team and the U.S. team? Yes, of course. So we know what the levels are. It's right there on the charts. If it breaks that, we short. If it starts to pull back, you can short a bit, but you got to be quick. But so far, based on the internals, based on the fact that it wants to get overbought real fast, real soon, which can happen within the next 24 to 48 hours, which means not Saturday and Sunday, obviously, which means that by the 10th, which is Monday or Tuesday. I believe there's a Fed meeting coming up. I don't have the exact date yet, and I'll be looking that up as I speak. June Fed meeting, the joys of having multiple screens. And it says the June Fed meeting is on, I know it's mid-June, so that's going to be another major catalyst. I don't have the exact date. I'm going to look it up on the calendar date. What am I doing? Bear with me 1 second. Okay, the next Fed meeting is next week. Not next week. My apologies for the slight delay. It is, I'm assuming it is the week of, yes, the next Fed meeting, and all of you can look at this. The next Fed meeting, and this is big, is on the week of options expiration. How do you like that? Right? Right there. And the press conference, double whammo. The three-wave move that happens every single day on the Fed meeting, which I've shown you guys how to navigate to a large degree. And Friday, June 21st, monthly options expiration, third Friday of each month, we have quad witching. So what happens in the last week generally? 90% of the time, you have a up week going into quad witching, and then you get a lot of volatility. In my opinion, this is the end of the second quarter, June 30th, right? End of the second quarter. They will print, as per my experience on Wall Street, 14 years there on the canyons of Wall Street, I believe they will end the first quarter with dollar signs in their pocket because the managers who manage the trillions of dollars need to get paid. Simple. All right? That's what's going to happen. In between, there's going to be a heck of a lot of volatility, but they will end Q2, end of June, which is the following week, on a positive note. Now, I don't want to look that far. Just want to remind you all that the Fed meeting is right here on Wednesday, June 19th, which is 2 weeks from now. What generally happens on the week around the middle of the month? The market croaks. Again, that's an 80 to 90% probability that the market is going to basically fall. Okay, so it corrects. In the meantime, trying to get this thing going. Okay, there we go. So there we have that. So basically, the following week, coming into next week, we're going to see some very turbulent times, give or take 3 or 4 plus minus 3. So we're looking at starting around Wednesday, June 12th or 11th. We're going to see some very turbulent period going lasting into the 17th or 18th of June. You know what? That's called a date count. All right, day count. So just want to pass it on to you. Not the first time for all the members to know that. So that's what we're trying to get there. We could move back a little bit. We have a lot of selective winners that you can play even in the roughest markets. I've shown that every single day, almost every single day, there's been a stock or two which has gone against the market. Market's down 600, it's up. Okay, so it's up to you what you want to do. So the daily chart is showing 50-day magnet. Before that, we could see some vacillation, pull back, maybe 100, 150 points. Could easily do this. Test this again, and then move up. Remember, this, ladies and gentlemen, is a inverse head and shoulder. So most likely, by the first part of next week, going into the latter part of this week, well, this week is tomorrow, but by the middle of next week, we could very well move up a little bit. A level that I'm watching, which is a major sell zone or supply zone, where the breakdown happened. You guys can see it loud and clear here, and I'm going to draw a line right there. He's right there. You can see that. This is not rocket science, kids. All right, right there on the 28th of May. On the 28th of May, just a couple of days ago, we had a huge breakdown, right? And then after that, it was right here. This was the 23rd of May. So let's draw two lines here where you got to watch out for the big, what am I looking at? Like sinkholes opening up, because these were big sell zones. One's at 28.58 and one's at 28.42. We're above the 28.42 one right now, so we passed that one. But this is the one that I'm watching. I'm going to highlight that. And remind you all that the 28.58 level, which is approximately 28.60 or so, I believe, a little bit more on the S&P 500, is serious business, because market is not in the business of just giving you free money. The market's in the business of giving you free money. If you're a tactical trader like we do here at Clueless Day Trading and you're buying here, then it's like free money. But you start to come in really late around these levels because the market's going higher, you are going to get slammed and lose it. And many of you keep on doing the same crap all the time. I hope not, but I have a feeling that some of you do that all the time. So this is it. Okay? There. This is a major level here. After this, if it breaks loose, then we are off to the races at the 50-day moving average, which is again going to act like a major resistance. And if we break that, then we're looking at this downtrending, I repeat, downtrending Bollinger, upper Bollinger at 28.94. So that's it. So you got it. This is your daily chart. So far, this is getting pretty overbought. Expect quick, sharp pullbacks, which can be bought as long as the stochastics don't curl down. They can bend, but as long as they don't curl down, they are going to move higher. I could teach anybody to trade without any idea of what finance is all about. And the only way you can do it is to understand the correlations between some of the simplest internals and the externals, which is your candlestick charts. To me, this looks like a pattern. Maybe we don't get to the 50-day moving average. I'll take it 60, 70 points higher because I rely on my charts, period. Next one we're going to look at is the weekly. The weekly chart is quite bullish. Why? Despite the short-term resistances that I just explained to you right now, the weekly charts are, at least at this point, clearly showing a V-shaped crossover up, which is very powerful. Even the crossover up after the pre-Christmas, December 20, Christmas Eve massacre here was at a 45-degree angle. This is moving at a 60-degree angle. If some of you understand angles in geometry, right? This is a 45-degree angle. This is more like a 60-degree angle. This is a 90-degree angle, right? There you go. So brush up on that stuff from high school. So this is looking very sharp. This is a serious bullish engulfing candle. And looking at this picture here, remember, you can trade off these pictures, these charts. Forget about knowing all the nuances about yield curve inversions and my fancy explanations of macro game theory about this and that. If only thing that I can teach you all that you can help yourself make money, because after all, you're the one who's finally deciding whether to make money or not. Because when you tell your brain, I can't make money, you're never going to make money. All right? So you should just follow these charts, follow these candles, follow the colors and the structures. You don't need to know anything about the high world of finance and Wall Street and all that stuff. Just focus on this. That's it. That's one heck of a bullish candle. I showed this pattern, and that's a pattern that's getting played out right now. Now, this tells me that a lot of money, like a kiddie game, Monopoly, a lot of money, billions and billions, maybe $1 trillion plus, went into the market. Remember, we lost $6 trillion since here. So that's like $1 trillion easy that went in the market. Anyone knows how many zeros in a trillion? All right, exactly. So this is big. So what does that tell you? And I'm keeping this real simple, guys. All right, ladies and gentlemen. This is telling me that this money didn't just get in there to leave tomorrow. I could be wrong. We could have another big, fat red candle on this side. Let me change the color to red. Paint this red, like blood red, because of a massive tweet out of President Trump, out of something crazy out of the Chinese government, banning like a big shot of our companies, Starbucks and Apple and stuff, who make billions and billions of dollars, and telling Boeing, take a hike. We're buying everything from Airbus and Bombardier in Canada. Of course, we can have one more of these. But barring that type of black swan event, this is serious. This tells us the market wants to go higher. And the higher levels have been shown to you. Now, this is also a head and shoulder. Remember that? Head, shoulder. We have actually broken above the right shoulder. Excellent sign. Of course, excellent sign. I gave you guys even the 285 calls that I suggested today. Forget about the ones that I suggested yesterday. They went from roughly, their low was 30 cents when I told you guys to buy 52 cents. They went to $1.27. That's more than 100% on your money intraday. Forget about holding things overnight. So the head and shoulder is broken. Nothing is confirmed till it's higher. So I am looking around the 2880 level to basically say that this has now turned into a, oops, let me change the color again. Don't want to have it red. To basically over 2880, we would say, which is roughly about 200 to 250, 200 plus points from here on the Dow. At that point, we can say it's a W pattern, and we are going to be testing the old highs. I don't want to even go there. But given the poker game that's been played with China, given the Mexican standoff where the Mexican trade team is being very compliant, very smart in how they're dealing with the demands from the Trump administration. If any of those two things or both of the two things happen over the next course of weeks, we are going to hit new highs in the market. So that means the weekly will get overbought again and possibly overshoot. And these charts have drawn that many, many weeks ago. If we overshoot and take out the old highs, I'm not even going there yet, but I'm just explaining to you guys. It can happen, okay? Then this will basically get back here. We will overshoot, and we could possibly go, believe it or not, to 3,000 on the S&P, if not more. But that's too much of a stretch for me to call that at this point. All I'm saying is that respect the size of this body of this candle. This is not a joke. This is a weekly candle, which engulfed, almost took back the last 2 weeks in one go. And barring any major fallouts on the trade front and the Brexit front, because the Fed's, Powell is a great guy, always said that. He's a true patriot. He's an economic patriot. He doesn't listen to the politicians. He's doing what he needs to do. And like he said yesterday, was it yesterday? Yesterday, I think, where he said, no rush to raise rates. We will cut rates if necessary if the U.S. economy slows down. That is the sign of a true patriot, not the big talk from all the politicians, both parties included. Okay? So that's it. The monthly had a very interesting combination. I'd like to show this to you guys. This, ladies and gentlemen, is still an inverse head and shoulder. By now, you should have inverse head and shoulders stitched on your pillowcases or on your fridges or on your not on your toilet paper, hopefully, but just like put inverse head and shoulders. So when you're like, oh, feeling good and you're stretching in the morning, that's an inverse head and shoulder. What's a head and shoulder? When you put your hands down and say, oh man, I'm so tired. You know, when your arms are all hanging like that and you're like, oh, this market's gonna kill me, life sucks, you know, I live in the greatest nation in the world, but everything sucks. That's your head and shoulder. Bearish, negative. What's an inverse head and shoulder? When you stretch your arms up high and you say, I live in the greatest nation we are in this world, and regardless of what happens, I will raise my arms, I'll raise my hands, and I'll fight back. That is a positive known as an inverse head and shoulder. All right, remember that. So on the monthly, the next time, just stretch your arms up, say Clueless 8, and feel good. And hopefully all of you stretch every morning. I try to. Stretch for 10 minutes. Do all kinds of funny stretches. Makes you feel good. So saying all that, you have the unemployment number means nothing. Trust me, not that much. Okay. It's important, Mike, and that's why I showed you where the pullback. I just saw Mike's comment. I showed you where the pullback might be, the 150, 200 points, if the market decides to do that. But overall, the unemployment number is not that important. Employment is strong in the U.S. overall. So, saying all that, it is still important, but it's not the ultimate element that breaks or breaks the market. So saying all that, this is the inverse head and shoulder, and it looks pretty good. That's a monthly chart, and we are seeing that happen on the stochastics. It's pretty damn good, and that was heartening to see for us who are generally bullish overall. Here we go. See that? So that's it. So I don't want to get into it too much. I've explained a lot of stuff for you guys today. This is your short-term charts. Everything I talked about happened. Futures are down roughly about a point right now. This is where we are in the after-hours market. You gotta trade these charts, or else you'll always be sitting there doing nothing, which means misery. This is your 15-minute chart. This is your 1-hour chart. 50 fib engaged. Pattern completion at around 28.93. At least the first stage of the pattern completion is up here. That's the next fib. The dotted lines are always the Fibonacci levels. This is your 61.8%. This is 50%. This is 38.2%, 23.6%. Thank Mr. Fibonacci from back in the 17th century, I believe, one of the greatest mathematicians to come up with these numbers in nature that replicate themselves. It's fascinating. This is your actual S&P 500, not the E-minis. The S&P 500, which is static because it doesn't move after hours. The S&P 500 doesn't. This is where we are. These are gaps. Upper end of the gap is 28.56. That's roughly 13 points from here. So far, looking good. So far, getting quite overbought too. Lots of great individual stocks. 2 huge winners after hours. Beyond Zoom PD is up a little bit. Not bad. 2 or 3 points. Multiple trades that I put across, which have worked out fantastically. Swing trades, Zillow, Snap. Some of the healthcare providers that when they hit those levels, we sell them. Those have worked out great. UNH, Anthem, GH, Guardian Health. Get a company, get to know it. Serious company, worked out great. We're long on the trade, on the swing trades, repeatedly on Edwards Life Sciences. Don't know about the company, read up on it. Boeing, doing fine. We keep on trading the ranges and moving forward. Lots of names out there. Feel free to Netflix, killer winner, killer. Missed on the Apple side on the last couple of days, but Netflix just paid the bills. Tesla, same story. Got to be quick on it. Still looks like it wants to go higher. So ladies and gentlemen, that's a wrap. I am doing my best to help you all as much as I can. But you know, when somebody once told me, when you tell people you're trying to help them, don't tell them that. Tell them they need to help themselves. You're just showing them the tools to help them. Because when you tell them you're trying to help them, they feel like welfare recipients. Like the government's trying to help you. So you don't need to do anything. You just need to sit on your butt, watch some crazy shows on TV, and a welfare check's coming in the mail. Well, I am not here to give you welfare checks. I'm here to give you the tools so you can write your own paychecks. On that note, love you all. See you tomorrow. Get ready. There's always an opportunity every single day to make some money. Doesn't matter where you're coming from. God bless you all. Good night.